What's been happening to A2 Milk? From market darling to losing nearly 3/4 of its share price, ASX A2M has been on a steady decline over the past year. There's been multiple downgrades in terms of forecasted guidance. There's been concerns about the Daigai channel and its distribution of its products. It's had to take stock write-downs. And of course, just recently, there's been a class action lawsuit opened up against it. You might be wondering what's been happening with the A2M story and then where does it head from here? In today's video, we're going to unpack it all. We'll talk about the Daigai channel, why it's important to the A2 Milk story, and where this might head. We'll talk about the numbers that came out of its FY21 report. And then at the end, we'll also discuss an interesting competitor playing in the space that actually came out with a recent report that's really provided a bit of support and encouragement for the broader infant formula sector as well. If you do enjoy the video, don't forget to hit the like button. Feel free to share it out. If you're new here, welcome. We make daily videos, so make sure you've subscribed and turn your bell notifications on so you won't miss any of our episodes. With that, I guess it's time to talk about A2 Milk. You might be wondering, first of all, what is A2 Milk? So A2 Milk's products contain only A2 proteins. The majority of most regular milk contain a mix of both A1 and A2 proteins, but A2 only products are considered healthier, easier to digest as well, and to absorb. So there's a lot of interest surrounding A2 only products, and this is where A2 Milk hopes to feed into. A2 milk, interestingly, is also more comparable to human breast milk versus A1. And there's a range of different providers as well. A2 milk's not the only one, but of course they're one of the leading names. And over the past period, they've had a phenomenal period of growth. A2 Milk was one of the largest New Zealand companies by market cap. They truly were an ASX darling. They were into the ASX 50. Unfortunately, they've been removed from that over the past period after the sell-off. But they really were one of the leading companies over the past 5 years. And so you might be wondering, with all of that retrospective discussion, what's the story now? What's happened to A2 Milk? As you can see here, just from some of those high-level numbers on the P&L, you can see that their revenue on the top line has dropped by around a third, minus 30%. Their gross margin is, of course, dropped significantly as well. But looking down the line, there's been a range of increased costs and, of course, a reduction in sales. A lot of that has had to do with the uncertain period over the past year. We know that there's been the virus. We know that there's been lockdowns. But if you think about the storyline about what happened with A2 Milk, at the start of the virus and the lockdowns, I actually saw an increase in demand for their products. There was significant focus on restocking of pantries. I'm sure you remember when Safeways or Woolworths or other supermarkets were completely empty. So A2 Milk saw a significant increase in demand for their products as people were preparing for what could have been a longer lockdown. However, as people brought forward their purchasing, then they actually didn't need to buy any more of their products because they had their stockpiles there. So A2 Milk actually saw a reduction in demand. As a result of that, they had excess inventory, so they had to start discounting some of that as well. But that was all amplified and compounded by the effect of border closures and the Daigai channel, which we'll talk about later on in the video. It's a fascinating period. I'd love to know your thoughts on it all, so drop in a comment below what you think about A2 Milk and where do you think the story heads from here. And before we dive in, a reminder that I'm not a financial advisor. The stocks we discuss are not buy recommendations. These videos are just here as a general discussion to be that starting spot for you to do your own research from. With both EBITDA and net profit down by over 70%, it's clear to say that there were significant disruptions to the distribution channels and most namely the Daigai channel for ASX A2M. So to understand the Daigai channel and why the disruption was so significant, you've got to paint a bit of a context about what's happened previously. So there was an infant formula scandal and story that happened in China over the past decade. As a result of that, public perception and public confidence in Chinese label infant formula was actually at record lows. And so there was significant demand for Australian products and Australian labeled infant formula. A broad range of products, but particularly infant formula was one that stood out. The Daigai channel was an informal channel where individuals, potentially driven by students and travelers, but all types of people were sending back products to China to be sold over in China. And so on the back of that, the Daigai channel really picked up pace. I'm sure you might have seen the videos of people lining up at supermarkets, waiting to purchase the infant formula to send back to China. Or you might have heard of specialty stores or warehouses who were contributing and selling through the Daigai channel. But over time, the Daigai channel became a legitimate and very significant sales channel that companies leveraged and utilized. It wasn't just A2 Milk, but companies like Bubs and A2M were beneficiaries. Blackmores, Bellamy's, a range of companies were real beneficiaries of the Daigai channel. However, with international border closures, which of course happened around the world last year, there was a significant reduction on students, as well as significant reduction on travelers who potentially would have been sending things back through the Daigai channel. So this severely impacted ASX A2M. And so just to have a look at the impact and really get more granular into some of the numbers, you can see how this effect played out. As mentioned, of course, A2 Milk provide their infant formula both with China label as well as English label, and that's sold whether directly through to China or of course sold in Australia and went back through the Daigou channel. So having a look at some of the changes in numbers from FY20 to FY21, you can see that the big standout was a reduction in over 50% in infant nutrition sold in Australia and New Zealand. Of course, a lot of that was making its way back through the Daigou channel. There was, of course, a reduction in demand over in China as well. Growth was slowing due to the virus and the lockdowns, the same that it was playing out around the world. But there was also reduced individuals who were actually able to send it back. Potentially students who might have studied in Australia previously were back at home, or they just didn't have the demand to actually feed into. When you have a look further down the line, you can see that liquid milk, well, of course, something that immediately comes to mind when you're thinking about A2 milk. Liquid milk sales actually grew both in the Australia and New Zealand as well as the Asian markets. There are the nutritionals, which is a small sector. It's a new sector that continues to grow. Did have a significant decrease in the ANZ market, but did have a little bit of uplift actually in the China and the other market. And then it's worth knowing as well that A2 milk has begun expanding into North America. It's still in the relative early stages of expansion, but this is a growth avenue that they're looking to pursue. And of course, we've seen many supply chains and companies around the world realize that they've got to build in resilience to the supply chains. They don't want to be reliant on just individual sources because these types of disruptions can happen. So this expansion into the North American market is an opportunity for them to continue to diversify out these supply chains more broadly. And so on the back of that significant decline in demand for English label infant formula on the back of the Daigou channel disruptions, A2 Milk has seen a significant softening in their share price. Of course, they went from a market darling with the share price in and around that $20 mark at its peak in mid-2020, falling down through key support levels from $16 of $15 to $13, then $10, and now it's been trading in and around that $5 to $6 mark over this past period. The market cap is in and around that $4 billion market cap. You can see that on a trailing 12-month basis, its price to earnings is trading above 50. On a forward PE basis, it's trading at around 35. But of course, it's worth noting as well that there's been a significant contraction on their PE multiples because of the reduction in earnings. And so a lot of the actual multiples that they trade on will be contingent on the growth rates that they can or can't get back to over this next period moving forward. And so, of course, with those disruptions, with the shocks to the supply chain and the lockdowns around the world, A2 Milk responded to them, as did every other company around the world in their own individual ways. They addressed a range of key different factors that they wanted to focus on. Firstly, they addressed excess inventory issues. They did take significant write-downs over this past period, but they've looked to address it. They're looking to bring down the periods that the products are sitting on the shelves as well, which is important. And they're hoping that they're working through these problems now. They've looked to rebuild their management team. They've brought in a new CEO as well. And they're now working towards a new strategy. They've got a strategy day outlined for October the 27th, so not too far away in the future. And that's where they'll be able to unveil their new strategy and the focal points for the next period moving forward. Along with that as well, they are well capitalized. They've got over $800 million cash available at the time of the FY21 report. So they've further increased their brand investment to really drive demand as they go after new segments. And they're also investigating options to deploy their capital. They've got now a 75% stake in MVM. It gives them a bit more control over their manufacturing as well, but they're still very well capitalized. And so they'll look for further avenues to deploy that capital and look to seek to get a return. And so there was a major piece of news over the past few weeks that a class action suit from Slater and Gordon has been brought forward. This has to do with shareholders who were acquiring an interest between August 19th, 2020 and the 9th of May, 2021. And it really did have to do with the continuous disclosure obligations. Of course, it's an evolving situation. Nobody knows how it will play out now, but I did think it was worth just being aware of this because we know that markets dislike uncertainty. And so this will contribute into the market sentiment in the short term until we get some more information surrounding how it will all play out moving forward. And so a really interesting piece of news that came out just recently had to do with ASX BUB, Bubs. It's actually a competitor for A2 Milk. So you might be wondering, why was this so significant? They brought out their quarterly results. And as you can see here, some of their results were absolutely stellar. Top line, they nearly doubled by 96%, which was absolutely fantastic. But the one that really stood out here and one that will really perk up ASX A2M shareholders' ears is the fact that their Daigou channel grew by 650-ish%. 6.5 times over the corresponding period. This, of course, is a significant uplift. And you can actually see on the timeline that they laid out, they've, of course, followed a fairly similar type of timeline to A2 Milk. There was lockdown pantry stacking, which saw an increase in demand. The Daigou channel collapsed due to the border closures, where there was significant effects. They thought that Q1 of FY21 was actually where the largest effects were, as the world was locked down and there was not many tourists or students coming back in. They seem to think that it started to bottom out here, and they've shown that through their results. They've been rebalancing their inventory, looking to enhance their supply chain and their value chain, building out resilience, which will, of course, hold them in good stead moving forward if they've done that well. And now they believe that they've begun their turnaround. Their rebuild phase is going, and they're able to build from this base that they've seen here. It's really interesting. These are recent results. We're, of course, awaiting ASX A2 Milk's results, which will come out over the next few weeks for the quarterly. But if they can follow this type of trend, it will be fascinating to see how the share price follows if so. And so then I guess the big question, is there hope? It is a big question, and everyone's going to have different interpretations of it. And it's really going to rely on their assumptions about where the growth rates will head from here. The opportunity or non-opportunity for A2 Milk rests on the ability to see a resumption in their growth trends. We can't overlook the fact that ASX A2 Milk was growing at phenomenal rates over the past years before heading into this period. It was growing at a consistent click of 30 to 40%. It truly was a market darling for a reason. It had really solid financials. So the question is, can they get back to there? Of course, the resumption of the Daigou channel will be key, as we've talked about before. There have been some takeover rumours. I know Nestle was a name that was mentioned. We'll see if there is anything to come to light out of that. And of course, this expansion into new markets to build out resilience in their supply chain, to really give them that foothold and the base to build moving forward. They'll be in much better shape if they can continue to diversify out, as they're focusing into not only North America, but looking into Asian markets as well. So we'll see how that plays out. The new management team's now been established, so we'll be watching to see the strategy that's unveiled at the back end of October. And it has lost its market darling status, but the share price and the valuation has also come down as well. The question is, which one has outpaced the other? Is there now value to be found after the significant fall off? Everyone's going to have a different interpretation, so we'd love to know your thoughts on it all. Drop in a comment below, let us know what you think. If you enjoyed the video, don't forget to hit the like button. Feel free to share it out as well. As mentioned, we make daily videos. We've interviewed a range of different CEOs over this past period, so we'll leave links to those up above. And if you're new here, make sure you've subscribed and turn your bell notifications on so you won't miss any of our daily episodes. Thank you so much for joining us. For now, stay well and happy investing.